All right, good morning, everybody. Welcome to the Hurley Investments Trade Findings and Adjustments of, oh my goodness, this is the wrong day. June 2nd. Jeez, I can't believe it's already June. Mercy and grace. All right, a couple people still trying to load in. Give them just a second. Any of you can hear me? Just give me the thumbs up. Let me know. Perfect. All right. Thanks, Mark. Thanks, Jim. All right, so what do I have for you today? Let's, as usual, recap some of the stuff we talked about last week. Went over the QQQ puts that we had put on. What was it? 285. Took off for a loss, and basically put them back on the next day. Things started to fall again up at 300, and we lost some on the first one, made some on the other ones. And my summary was that I wish I'd put it on much higher. Why don't we just look at the QQQ just to follow up real quick, much higher. Pushing 310, I believe. So 320 now is going to be pretty close to the 50-day, especially if we kind of meet it as time goes on. That 50-day might come down towards the 320 level from 325. But right now, my thought is that we're following a short-term bullish trend in our stock market. Yeah, last couple days kind of came back a bit after 3 days of big up days. And once again, what happened was simply that we hit down here at 3,800, the 20% number of being down for the year, which last time, if you remember that in 2020, is big technical buying support. And so this week or last week we had got protection off on various things as various stocks as they started to come up a bit. This week we're really just kind of looking to continue to watch this trend and follow it, and decide what stocks we need to put more shares to work on, as we took profits on some of those put protection positions to protect our shares. And so I think what I'll do is just kind of go through our stock positions and look at charts and kind of go over some of those things. First, continuing on with what we talked about last time. Oh, thanks, Jim. Let me get that screen back on. Sorry about that. Did I even show anyone the queue? Let me try that again. Should be able to see it now. Yes, so here was the QQ. There's our 50-day, 320. So the thought is we follow this trend up to a technical resistance, which would be that 50-day or the 320 level for the QQQ ETF. and get some of those puts back on. But just in general, as we follow the market, to see if it gets back up to that 50-day at 42.55 or close to that, before we have a technical resistance that then causes things to go back down. So you guys should be able to see the screen now. Hopefully there aren't any issues. Let me know if you can't see it. So we went over what if our economy falls into a recession. Again, things aren't looking amazing, obviously, and inflation can totally destroy our consumer strength, buying strength, which is a big part of our GDP, as I mentioned here. We talked about how Target and Walmart earnings, they struggled to beat their numbers because of supply chain issues. I mentioned that because of that was part of the reason the market fell, because they're worried about consumers and their buying strength, and worried that they're starting to struggle. I'd mentioned that consumer spending in some degree has had to shift from wants and things like entertainment and shifting to things like, you know, needs like spending more on gas and food. But probably a bigger thing that I didn't mention was really Target and Walmart earnings had a lot to do with supply chain. So I could probably add that in there. So even if a consumer is totally fine paying for something, even if it's more, if those products can't get on the shelves, they just sell out quickly, or just they can't get there quick enough for people to buy them, and that affects Target and Walmart. Several others. Costco did a bit better. So that's that. If there's any questions on that, go ahead and throw them at me as you see fit. But otherwise, I'm going to take this off. And before I go through some of the charts, I just want to go through issues we're dealing with right now. Because we're, as I said, we're bullish. But if you guys had a chance to watch Kevin's webinar that he recorded and sent out, Kevin's Kevinar, really the reason we're bullish is because of technical chart, and it's kind of a frail reason to be bullish, but it is a reason. And until we see a change in direction, it's what we're running on right now. But further out in time and the bigger picture, we still have these issues. I mentioned supply chain issues. What are some other ones you guys can think of? We did this several weeks ago. I'm really just going over it again. So get ready to type. What are some other hurdles that the market has to get over? I'll give you a freebie here. And I'll say some comments coming in as I wrote inflation, saying inflation. Yes, obviously this is the big one. What else? Thanks, Destin. Thanks, Jim. I'll put both of those down. I spelled wrong. Need an extra E. So farming production, big one was wheat, right? That Ukraine supplies to much of the world. This isn't going to really affect. I'll side note this. Problem maybe more for Europe. I'll say we don't have a huge problem with this. Which brings us to still going on with the war. So rising interest rates to try and curb inflation, which maybe might help a little bit, but not going to change oil or supply chain or the war. So they're going to keep raising interest rates and pretend that it works until one of these things, the war, oil, supply chain, this farm issue kind of goes along with the war, till one of those changes. And really the market is not going to see anything positive until one of these things change. Yeah, we could start opening up drilling leases and making it easier, removing regulation around the oil drilling. start back up the building of the Keystone Pipeline, which even though there's not going to be oil flowing through it anytime in the next few months, it changes the price of oil because of expected supply that's going to change. And yet we're still refusing to do that. You know, last I heard, Biden was wanting to import oil from Venezuela, like not many worse dictatorships you could bargain with. So just keeping with the helping out his green lobby. Yeah, Jim, good point. Shutdowns from COVID are still out there. That kind of goes along with the supply chain issue because it's really China, but it is important to note. Oh, not shut down, shut down. I tell you, I have issues talking and writing. Could make an argument that it is shit down. Still a valid point, but yes, still shut down, and I guess they have been lightly easing, I don't know, on the worst places, but really until we see China realize that these shutdowns and zero COVID policy is not the answer, that's not going to be helpful. Baidu, and we'll talk a little bit more about that in a minute, but Baidu had their earnings, did great. You know, everybody shut down is using Baidu to surf the internet, play games, do whatever. So they did great, just like we did. We had our tech stocks do great during 2020 when we were shut down. So again, any of these things change for the positive, and we might see the market continue to go up. But otherwise, that's really what we're looking at. The other thing was on the positive side, if we get gridlock, if we get gridlock in Washington, meaning Republicans take some of the seats of the House, maybe in the Senate as well, that puts a little more gridlock in Washington where much less is going to happen. And I'm not going off of an opinion here. It's just that simply the fact that the market likes when there's more, they know what to expect, and when there's Republicans in Congress and a Democrat president, there is less chance of anything happening. So really anything. There's a little bit more keeping each other in check and that sort of thing. And the market has in the past really liked that. That won't happen until we get the primaries coming this fall. that's really it. And this could even change. We could see, because of the two big current issues with gun control as well as abortion coming up, that could possibly change the tide and keep Democrats in the majority. But that's a difficult one to predict, because that could um, easily go the other way and continue to encourage people to vote Republican. So I guess we'll see when we see it. Questions about this stuff? Any other thoughts or ideas? We are looking for next rate hike around June 14th or 15th. Which we'll look to get protection on before that. Jim asked, is employment going to still be an issue? What do you mean? In what way? Because we're at the lowest unemployment level, highest employment pretty much ever. So there's not a problem with employment, but these issues still stay around for long. It's going to be hard for companies to keep employees who want more and more money, and with higher interest rates, companies may lay off employees. It's just part of the typical business cycle. Right, so finding qualified folks for technical jobs is a struggle. Well, Jim, the answer is I don't know. But technical jobs, especially for tech companies, they're going to be more worried about paying high amount of debt and worried about costs, as opposed to getting more people employed for higher growth. But again, that changes. We have a pause in interest rate hikes because inflation's coming down quickly. You know, the situation could certainly change, but that's just not where we're at. All right. Real quick, just want to go through and just show you, give you an idea of what I go through and look at daily. I just start at the top. We got Apple back at 150, which was previous support level and now is a resistance level. So we're looking to see if it holds that. I'm not sure that we have enough profit in our puts to be adding another more shares of Apple. Kind of more just letting it ride. Does anyone else see something on this chart that gives you pause for concern? No. Make it a little bigger. What would you see here that might concern you? Destin says, wondering if it wants to go down and fill the gap. I don't see a huge gap that it would be needing to fill. The only gap I see is about here, but really that's not really a gap. And if that was a gap that needed to fill, we certainly could have filled it on one of these 2 days here. But no, I mean, the stock is holding this pivot point. It's kind of stopped to test it and struggle around it, and this morning opened below it, and now holding nicely above it. Jim says, seems like a downward trend since the beginning of the year. Well, most of the year it's been sideways. And this is pretty volatile sideways. But maybe since March is for sure been a downward trend. But Mark gets our reward. 10 points to you, Mark. 50-day is crossing over our 200-day. This typically means an 8% sell-off as those technical moving averages cross over in a bearish manner. It doesn't always have to mean that, but that is the probability of what usually happens. This is also Apple, so you never really know. They're having supply chain issues, but they're still kicking out phones. They're still doing fine. So but yeah, this is a technical issue that we're keeping an eye on, and may need to get protection there pretty close to 150. But I would still like to see the next couple days, if it doesn't continue up, to try and hit that 200-day moving average. But we could put Apple in the keep a close eye on it and be ready to get protection on. Next one would be Boeing. And I like that the predictive text always ruins my selection here. Boeing is in a nice upward trend. Again, quite a ways till it hits the 50-day. Might look more like at 150 as it kind of had stopped here a couple weeks ago, beginning of last month, around 150. But other than that, wanting to see Boeing go, especially today, it looks nice running above that pivot point. Not as worried technically about Boeing. Bank of America, already pretty close to that 50-day, but holding a pivot point, sort of similar, getting above a pivot point, holding it, and looking to see if it will continue to head up to the 50-day. Baidu went right through their 50-day. This was the earnings run, and came up right to the 200-day. Can anyone see an issue that we might need to worry about with this one? So, see an issue here, here. I'm sure there's more up here. Fairly close. So you can see what I'm a little worried about. Last few times it has hit that 200-day moving averages, it's gone down quite significantly before coming back up. This kind of more looks like the 50-day it struggled with, which we didn't struggle this time. So this will be another one similar to Apple, where we'd be looking at, and maybe more so than Apple, that we might look at protecting. The only reason we're being more patient is simply because of the fact that they did so great on their earnings. So giving it the benefit of the doubt, maybe we'll see it get above there. But that is one we're keeping an eye on. I just go down the alphabet. This one's similar to what Bank of America. Coming up, came down yesterday, holding this pivot point. I mean, similar with the market here. So a lot of these are following the market trend, as you'd expect. We'll go to Ford. Once again, similar deal. On the way up, trying to hold that pivot point, trying to get to the 50-day. Onto Facebook. Facebook doesn't look the same. It's been sideways. They kind of got jerked around by Snap earnings, but they had good earnings and said they would basically be less aggressive on their funding of the metaverse. And the market seemed to like that, but we're getting up to close to a 50-day and right at a pivot point. But we see it going a bit sideways, so might be one to just kind of leave alone until we feel it's necessary to get protection back on. But I would think if it gets up to the 50-day, I would be preferring to have protection there, as it is just followed it pretty close. This is, you know, a little more positive, but it held that for really 1 to 3 days, I guess you could say 4 days, and came back down. So the 50-day is going to be a real struggle for Facebook. Got a couple people with the Google, much better looking chart. They've already crossed their 50 and 200, but most stocks that we've shown already have, and they've had this big fall as a result. So we've already kind of done that. And again, looking to see it get up to 50-day. JP Morgan looks a lot better than Bank of America. Already above the 50-day. We're just waiting this, not waiting, but we're just looking to see it hold and maybe continue up. But that one looks like one we kind of let do its thing. Under Armour on its way back up, but it's really kind of in the middle of nowhere, quite a distance from the 50-day. We had gotten protection back on it at 1050 after taking it off. This one's just a little bit more tricky and difficult. These last 3 weeks can kind of show you exactly why. It's just been trading around that and difficult to pinpoint really what it's going to do. So more of a need to have protection on. Obviously, we're willing to take that back off if it continues up towards 11 or passing $11. Let's see what else we had. profited quite a bit from puts on Under Armour as it fell through here, and we put an extra. We could have put X number of hundreds of shares in everybody's account, and of that X number, we really just put in a third of that, just to be more conservative. And if it fell lower, we could put the other 2/3 of the protection profit into buying more shares. We're just kind of being patient. And last but not least, we have Visa, which has just been all over the place, but a very volatile sideways movement. Made some good chunks up on these downward ones, made a lot of profit on covered calls. So my thought is, let's see where this one ends up, but really we're looking at maybe 230 or 225, 220, depending on what kind of credit we can get for some covered calls for getting a little credit on our shares of Visa. That's what I'll be looking at today at the end of the day. But you've seen a couple times it's tried to get back above the 200-day for a few weeks, and I'd like to see if it doesn't do that again, where we can get some cover calls on a little higher, if that makes sense. That's really it. Guys, is there any other thoughts or questions? I think you probably noticed the theme here, which is a lot of stocks following the market, and it's really that technical bounce and seeing where it gets to before we look to add protection again at a technical resistance. Simple as that. Not seeing any questions come over, but that's really all I had for you this week, guys. I mentioned last week, if you're looking to put on a trade, it would be something like a Baidu that had a great earnings, has the market going for it, pushing it up. That would have been a good something to get on, or to dollar cost average if you have leap calls. So I would continue that and probably take a profit if that's something you can do. And that's about it for this week. Guys, thanks for joining me. Appreciate your comments. Good stuff. Thanks, Jim. Kevin should be doing a live webinar on Monday, so look forward to seeing you guys there. And there's nothing else. I will see you next Thursday. Take care.